Hey guys, this is the trade recap on NQ from the other day. I'm actually going to do a double trade recap. I ended today off with negative zero point 0.5 out of two trades. One trade was break even. The next one I reduced risk and I took a loss on. And I want to show you that next trade and how I managed it because I think it was a pretty good representation of how we can manage. Now, I was on the wrong side of the market for both of these trades. It's unfortunate, but it is what it is. I was trading against order flow, but I was trading alongside my higher time frame bias. And sometimes you're going to be in this situation, and that's okay. As long as you understand how to manage, it's not going to be the end of the world. Overall, I do still agree with both of my trades. I do believe that I could have potentially looked for or been more patient to realign with my bias instead of getting in so aggressively, but it is what it is. And I still think that it is a very good lesson for management. Okay, so the first trade we're going to be talking about has to do with the just posted inverse FEG or the reclaimed fair value gap. Okay, we're looking at the reclaimed fair value gap. So we've come into a type 1 right here. Type 1 POI, this has a draw on liquidity, a sell side draw on liquidity. Right? And I'm looking immediately at this POI here, this FEG. So we understand that this bearish candle here with no wicks will act as a key point to push price and continue order flow, breaking this low. But because we've come from a pivot point, we're looking to see if this area can fail before looking to go long. So how does an FEG fail? An FEG fails when we have a close above. Okay, an FEG is no longer valid when we have a close above. Of course, you don't have to put your stop above there. You can put your stop above here, but when we're looking to potentially short from this region, when we see that there's a close above, this is looking like a very, very, very weak POI. So this first candle doesn't invalidate it, but the second candle does invalidate it. So immediately in looking at this, I understand that on the H1, we have an SMB. And an SMB here pushed up, and then we've pulled back into this 1 hour type 1 ISP. So I can throw on the 60-minute chart here. You see this? This is the one that drew into liquidity, pushed up, SMB, pushed down. So I know a lot of you guys are going to be asking, why isn't this the SMB? This is a Newswick. I just act as if Newswicks don't exist when they're really large like this. So I'm going to call that this is the SMB, okay? We've pulled back into this region, created an bearish FEG down into it, pushed up into it. This candle closes below, so this is still active. Wick comes up, we form a bottom wick here, right? So this is looking like at this point, this candle is a big black bearish candle. Then we push up, close above it, and immediately when we closed above it, I was looking for this. I was in a call with Boban, and we were looking to long off of this. He had to leave, but I mentioned in our call that we were looking to long off this region as soon as we got a close above. And then when we did, I immediately dropped to the lower time frames to look for this to hold as support to take a long into buy side liquidity. So if I jump now into the 1 minute, as soon as we closed, I immediately went to the 1 minute and I started to study the order flow. I started to track the order flow. So we have, of course, a type 1. This is the swing point. Then we have a type 2. Rebalancing this whole FEG. Doesn't come to the lower one. That's fine. Pushes up, breaks up. Okay, so we get a break of structure. Break of structure. And then this is also a liquidity grab because this low puts in a new high, pushes down, creates a sweep of liquidity, and then pushes up, right? So now here on the 1 minute, this is in fact now a type 1, not a type 2. So this is a type 1, could even be seen as a swing point potentially. So we'd have an ISP here, this one breaks, and then we've just created a swing point. And then from here, I looked at that last down candle as my type 1, aka order block, right? This type 1 POI pushed out of it. And then I saw support forming and I executed here. And then I covered the below candle 2 because I understood that there's a possibility that price will want to come and fill this gap before pushing higher. And I believe what I did was I just placed my stop below the 50% of the whole type 1 range of the order block. And then from there, I targeted buy side liquidity and I got out right across all of these equal highs. Okay, so for about almost 4R here. Now, I want to sit here and just follow price, okay? This candle pushes down, sweeps liquidity. Why is this a sweep? This is a sweep because we've broken above a previous high, right? So this is, in theory, an area where stops are placed, break-even stops, for example. Pushes down into it, breaks up, confirming that this is a sweep and a type 1. So I'm looking to trade that type 1. Price reacts into this overall FEG, also an inverse. This is irrelevant information. What I'm looking at here is the fact that we have a type 1 and we're in an FEG, okay? Reacts, holds a support, starts to push away. No available FEGs in here. We look at the time here from 10 to 11. This is the time for the silver bullet. We have a clear bullish drawn liquidity. We can now look, and we have another drawn liquidity up in here, of course. We can look at these regions as our next likely draw, and we can look for that first FEG that prints and look, of course, to trade it within this range towards that. So we look here, we have an FEG that's printed at 10.12, and then it is tapped into at 10.20, 1, 2, 3, 4, 5, 6, 7, 8 times. So you have 8 possible entries to then target that next draw here from this region, covering that candle 2 or covering the swing low. Either way, you'd be in a good trade here. And that one results in even more RR than my previous trade, depending on where you put the stop, of course. And another beautiful trade. I was already away from the charts by this time. I set my take profit here and I walked away. But had I seen this, man, this is a gorgeous trade and a beautiful scale into the first one. Had I had this one even up into here, that would be a beautiful scaling with the same take profit, or even just getting back into this position after I've seen this and expecting to continue order flow is absolutely beautiful. Of course, this sweeps below, also becoming a type 1. And you can see that that type 1 is then held as support as we break above it. Use this support to push higher. And then until we hit that drawn liquidity, price is basically just going straight there with very, very little resistance up in here as well. You can see this little FEG here holding as support, still in that time limit of between 10 and 11, right? Just pushing aggressively into that next draw. So very interesting to see how this played out on this day, a very expansive day. Beautiful trades available here in New York session. Now, the trade I took today, been on a good win streak until today. I was looking at this one. I'm not going to talk about the first trade. I'm going to talk about the second trade that I took. So on the 4-hour, I was still, or sorry, on the 1 hour, I was still bullish. Now, did I make a mistake? Maybe. Of course, the 50-minute was in bearish order flow, but the 1 hour or the 4 hour, we were looking at this range here. I was looking at this FEG to hold. We were below it. And the hourly range was from here to here. Got a ISP, And this one might be looked at an ISP. And then what I initially saw was that we were failing to break lower, right? This candle, of course, did not exist yet. Push down into this overall 1 hour FEG. And then I looked at this region here as a potential area to reverse from and continue my bias. And now upon looking at this, I do see that here on the 1 hour, we actually do have a confirmed SMB here. When we break down with a body here, I initially didn't see this because I was looking at the lower time frame. But regardless, of course, I was caught on the wrong side of the market. That's going to happen, right? I'm not a perfect trader. No one ever will be a perfect trader, but my management was very good here, and I want to use that as an example to teach you guys something. So when we came into this region, it was later in the session. We're heading into PM session. I thought there was a good chance that we can come up above this high and reverse from here. Of course, I was neglecting order flow here on the 15-minute. Type 1 here. Expect a reaction from the type 1. I refused to look at that for whatever reason, right? So I decided to take a long to get in and use this region here, that 4 hour FEG, because this 4 hour candle was not closed yet. I was looking to see if this sweep below, or it was this sweep below, would come back up and hold as support, and it did for a bit, and then it ended up closing below, right? So I was a little bit preemptive on this trade idea. But if we see here, I saw this FEG and I looked to trade it and I got involved. Got involved here and my stop was below here. And price came up and I was targeting this high and beyond. When price broke above, I started to track the ISPs. So an ISP here. We got an ISP type 2 right there. And then notice that all of this was substructure, right? So there's this high, pushed up, pushed down. This low has done nothing. Pushed up, displaced, right? So the range of order flow was from here to here. We came down, formed a new ISP, broke up. And then if we follow and look at all of these lows, this low reacts to nothing. Therefore, it's sub, breaks up, just continuing the sub. This low, FEG, just gets destroyed. Nothing happens. This low reacts to nothing, therefore it's sub. And the range of order flow was this high to here. So what I saw was that there was a potential to take sub as liquidity and then continue bullish from this region. And that happens for a little bit before ultimately taking me out. But I understood here that this low should not be taken if we are in bullish order flow. So I was able to reduce my risk by about half by bringing it below that low. And we did get an initial reaction before taking me out. But just by following our rules of CO, even though I was completely on the wrong side, admittedly, following the rules allowed me to take a negative 0.5 instead of a full R loss, just because I was following these rules and managing it accordingly and quite aggressively as well. I always do say that manage on the 15-minute, but here, because we were so counter and late in the day and I didn't want to watch it, I decided to trail on the 5-minute, understanding that if I am correct on this being the draw, then price shouldn't come down below here. And of course, it did come below here, and I would have taken a full risk loss over here, but instead I took a half risk loss. So I do think that that was a pretty good use of management using our rule set. So something to learn even from my losses, something to learn from your own losses, right? Go back and study them. There's equal valuable information in your winners info, in winners and in losers. To be a good and an educated trader, you need to equally review your winners and your losers. A lot of people only want to look at their winners, and a lot of people only want to look at their losers as if there's something to learn from one and not over the other. But a wise trader we'll review both and learn something. There is good to be learned in losing trades, and there is bad lessons in winning trades, right? Not every winning trade is completely good. Not every losing trade is a bad trade. And albeit there are poor things that I can learn from this trade, some negatives in my trading this day where I was trading very counter, my management was very good. So a couple lessons on both sides of this trade, albeit a losing trade, there's a good lesson. I'm willing to pay half an hour to learn that lesson.